Hi, welcome back to the channel. Here's a quick quiz for you. What are the two most popular topics on this channel? Well, no surprise to hear that it's Russia and China. And in today's video, I want to talk to you about the trade relationship between the two countries because cracks are now starting to appear in that business model, particularly from China's point of view, because the sanctions are really starting to close in on all of Russia's businesses, particularly its oil businesses, because of the sanctioning of Rosneft and Lukoil, the two biggest oil companies, back in November of 2025. China is now pulling back from those purchases. However, this has actually been happening now for the past 12 months. So the sanctions are definitely starting to work. They're having a massive influence on China's interest in dealing with Russia. If we have a look at this table, it shows the level of bilateral trade. So basically, what this shows is the amount of business that China is doing with Russia and vice versa. So the level of exports from China to Russia and the level of imports from Russia to China. So we've got a total amount. And to keep things simple, I've shown it in US dollar equivalent terms because obviously, if we're looking at Chinese yuan or renminbi, and Russian rubles, it gets a bit mind bending in terms of the numbers involved. So I think everybody is easier to understand it if you're looking at it in US dollars. So if we start off with 2021, the reason why I'm picking that as the base year is because that's the year before the war in Ukraine started. So if we assume that that was sort of the normalized level of trade back in those days, the total bilateral trade was $147 billion. So reasonably big, nowhere near as big as the level of trade between China and the USA. In 2024, which was the year that was unaffected by Donald Trump's tariffs, China exported over $400 billion worth, about $450 billion worth of goods to the USA. And the USA also exported around about $160 billion worth to China. So in total, we're looking at about 600 billion being the level of bilateral trade between the USA and China. So 147 billion is nowhere near as big as that relationship. However, in 2022, it jumped by over 29% to 190 billion. And the main reason for that was because China started buying more oil from Russia because Russia was offering it at a discount to the global markets as a result of the invasion of Ukraine. Russia was hit with the sanctions. It was then struggling to find buyers for its oil, so it had to cut the price of its oil by $10 or $20 per barrel. And so China thought, great, we'll buy more of that. That continued in 2023 when we saw another increase of over 26%. And the total level of trade between the two countries increased to $240 billion. And Russia started buying more things from China as well because it didn't have as much choice in the international markets because many of the countries closed their doors to trading with Russia. In 2024, the figure rose by a further 2% to $245 billion, which was an all time high in the two countries' history. However, in 2025, we have seen the level of bilateral trade falling for the first time in the last 4 years by almost 7%. So it's now down to $228 billion, which is less than it was in both 2024 and also 2023. So we're heading back towards where it was in 2022. So I thought it was worth having a look at the details on this to go through what's going on, to get a feel for what China's perspective is on its business with Russia. So if we start off by looking at China's imports from Russia, because this is the biggest chunk of the bilateral trade, and the biggest single thing that it's importing is oil, but we'll go on to talk about that in a moment. This is the total amount of imports, so it covers oil and gas and coal and anything else that Russia is selling to China. So you can see that back in 2021, China imported $79 billion worth of goods. There was a massive jump of 44% in 2022, the first year after the invasion of Ukraine. It got up to 114 billion. We then saw another jump of 13% to 129 billion. It stayed at that level in 2024. But in 2025, we have seen a 12% fall. And that's a combination of a reduction in the volume of oil and also the value, because there's a difference obviously between the amount of oil that Russia purchases and the price of that oil. Now, Russia doesn't control global prices. So, over the last 12 months, we have seen a fall in the price of oil globally, and that obviously impacts on the price of Russian oil. So, if China was still buying the same amount of oil, but the price went down in the global markets, then the value of the oil would go down, even though the volume could stay the same. So I thought it was worth highlighting that point. So, what this table shows is that we're starting to see the tide turning. 2023 was the high point in terms of the increased level of purchases from Russia by China. We saw it plateau in 24, and now we're seeing it starting to come down. And let's not forget that the sanctions against Rosneft and Lukoil were only put into place at the end of November 2025. So they haven't really had a massive impact yet. They will in 2026. Now, if we break it down and have a look at the crude oil imports, because this is obviously the biggest single purchase that China is making from Russia, and I'm showing here the actual volume. So we're talking about how much oil in terms of the quantity rather than the actual price of it. So it's a similar pattern to what we've just seen. But in 2022, we saw an 8% increase in the volume. If we jump back to the previous chart, you can see there was a 44% increase in the value. So that means that prices were rising rapidly at the same time as the increase in the volume came. So this was win-win from Russia's point of view. They were selling more oil to China at higher prices. In 2023, we saw a 25% increase in the volume. And if we jump back to the value chart, you can see that the total value only went up by 13%. So there was an increase in volume, but prices started to come down because Russia was having to offer discounts. In 2024, the volume went up by 1% compared with flatline in terms of value. So that means that prices were still going down. And in 2025, the volume has fallen by almost 8%. And if we go back to the value chart, you can see that the total value is down by 12%. So what that tells us is that there was a fall in volumes, but also a fall in price. So that's lose-lose from Russia's point of view. They're losing the volume and they're selling those volumes at lower prices. So that explains what's going on. But the key issue here is that you can see that since 2024, there has been a reduction, a significant reduction in the volume of oil that China is buying from Russia. So it's not just to do with what's happening with the price in the market. This is China buying its oil from elsewhere because China actually increased the amount of oil that it imported in 2025. So it's not cutting back, it's just cutting back on the amount it's purchasing from Russia. And if we have a look at this chart, it shows the actual value of the crude oil imports from Russia. So this is just the oil imports in each year. So you can see that in 2022, the value went up by 70%. That is absolutely massive. And that compared to the 8% increase in the volume. So 2022 was a good year for oil countries because oil prices went sky high. The value increased by a further 10% in 2023 compared to a 25% increase in the volume. So prices had started to calm down and go down at that point. The value actually fell in 2024 by 3%. Now that's interesting because that compares to a 1% increase in the volume of purchases from Russia. So this tells us that prices started to suffer in 2024. And in 2025, the total value of the purchases by China from Russia of crude oil have fallen in the first 11 months by 19.6%. That is disastrous from Russia's point of view because the bottom line is the revenue. It's not about the volumes. The volume of oil is interesting in terms of oil production and all the oil industry. But in terms of the Russian economy and keeping everything funded and supporting the deficit that Russia is running up as a result of the war in Ukraine, it's all about the cash. Cash is always king in these situations. And a 20% fall in the value of purchases by China is not good from Russia's point of view because it doesn't have any other countries that it could replace those purchases with. China is the biggest purchaser from Russia. So this represents a serious problem from Russia's perspective. Now, in terms of the other side of this relationship, how much stuff China is exporting to Russia, I thought it was worth having a look at what's going on with that side of the relationship. Because from China's point of view, one of the key reasons why it would want to continue buying oil from Russia is because it wants to maintain the relationship with Russia. And it's a two-way street. China is the world's biggest exporter of goods. That's what it does. It makes things and then sells them to every other country in the world. So clearly, it will want to see some sort of benefit from selling stuff to Russia. So if you have a look at what's happened over the past 5 years, this is in value terms because China's exporting a variety of different goods. In 2021, which is the base year, it exported $68 billion worth of goods. There was an increase of 12% in 2022, the first year after the war started. And that was because Russia wanted to increase its relationship with China because it didn't have as many options as it had done historically. In 2023, we saw a surge in the volume of imports going to Russia. And this was as Russia struggled to source things in the international markets. It started buying more from China. It went up by 46% to $111 billion. 2024 was the peak year of trade in terms of China's exports to Russia. There was another 5% increase to $116 billion. But interestingly, in 2025, there's been a reduction of 10%. It's now down to $105 billion. And from China's point of view, that's not good because it wants to strengthen its relationship with Russia. Therefore, it wants Russia to be buying things from it, to actually give it some money. So a 10% fall is not going to help the relationship over the long term. And the problem that Russia has at the moment is that the increase in the sanctions over the past few months, particularly whereby Rosneft and Lukoil have been sanctioned directly, there's also a renewed price cap on Russian oil. So they've had this floating 15% discount against global market price cap now that's being enforced. And the shadow tanker fleet, firstly, is starting to fill up with Russian oil because they don't have anywhere to store the oil. So they've been loading oil onto tankers. Those tankers are now floating around aimlessly, waiting for somebody to buy it. They're running out of capacity on those tankers, but also the shadow fleet is being clamped down upon. So the sanctions are being tightened in terms of insurance and making sure that those ships are seaworthy. And if you don't have insurance, then you can't physically dock at any of the ports because the port won't let you do it without any insurance. So Russia's facing a wave of problems at the moment, and China is now deliberately stepping back from the amount of oil that it's purchasing from Russia. So these 2025 figures show us that. They show us that there's been a fall of almost 20% in the value of oil and other goods being purchased by China from Russia. But it hasn't really shown us the full year impact of those sanctions. As we go forward, as those sanctions bite further, and more Chinese companies decide that it's simply not worth the risk buying Russian oil because they can buy it in the international markets for a similar price. It's a bit more expensive because Russia's offering these massive discounts now. It's the latest data that we got showed that Russia is now selling its oil for $35 per barrel. That is way below the current market rates. But that's what Russia has to do to encourage people to take the risk of being hit with those secondary sanctions. But the problem that China has is that the vast majority, in fact, 98% of all of its global trade is with all of the rest of the world. It's not with Russia. Russia simply isn't buying enough from China to justify taking a gamble on being hit with sanctions. So China is now pulling back to maintain its relationship with countries like the USA and Europe and the United Kingdom, all of those sort of deals, because that's what's paying the bills for the majority of Chinese companies, not Russian companies who are buying from them. They're relatively small beer. So China is now towing the line in terms of not going against the sanctions. It's pulling back from its trade with Russia. And this represents a really dangerous situation from Russia's point of view because it doesn't have another China that it can turn to. When Europe turned its back on Russia, it decided that China and India were the best two options. China and India were ambivalent in terms of what was happening in Ukraine. They were happy to ignore that and just carry on buying lots of things. And so that worked okay from Russia's point of view. They found an alternative market. But if it loses those purchases from China and also India, we haven't touched on India in this video, but India is also pulling back from buying Russian oil because of the same reasons. Russia doesn't have anywhere else to turn to. There simply aren't any other markets that it can dive into. So, what that will mean is that it will just lose trade, it will lose volumes in terms of the purchases. So, it will then have to cut back on its production in Russia, which could be catastrophic for the Russian oil industry. We've talked about that in many previous videos. But the biggest single impact is going to be on revenue. Revenue is starting to fall like a stone. And if Russia doesn't have that revenue coming in, then the deficit between what it's actually earning and what it's spending is going to widen at the same time as the deficit is already really high. And the other thing for the budget for this year for Russia is that they assumed an average price for the barrel of oil of $59. The current price of $35 is a long way below that. And there's no way that Russia is going to get anywhere near $59 because global price of oil is likely to go down for the rest of 2026 as Venezuelan oil re-enters the global markets. We don't know what's happening with Iranian oil yet, but that could also re-enter the global market. So Russian oil isn't needed as much. And we're probably going to see price of oil going down maybe to $50 per barrel, maybe less, which means the price of Russian oil could end up being $20 per barrel. Who knows what it could get down to. But all of this is spelling really bad news for Russia, its revenue, and the Russian economy in 2026. So hopefully you've enjoyed today's video, you found it useful, informative, and most importantly, thought-provoking. That's what I'm trying to do, provoke some thoughts. If you've liked what I've said, then please give me a thumbs up. Please subscribe if you haven't done so already, because that basically keeps the channel going with the algorithm. So if you do watch my videos, please hit that subscribe button. It's not really a subscription. It's just an indication that you quite like some of the stuff that I make. So that'd be really helpful. Thank you very much. Don't forget, I'm currently running my competition whereby you can win my house located close to one of the best beaches in the UK, or £250,000 in cash, whichever you prefer. It's another way of supporting the channel, bit more fun, bit more interesting. So if you'd like to buy a ticket, please have a look at the QR code on the screen now. You can scan that with your phone or look at the link in the description below. Thank you so much to everyone that supported me in other ways. If you bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member or buy me a coffee member, really appreciate that long-term support. And here's something to put a smile on your face.